Checking in on Apple, the stock up about 10% since hitting mid-June lows. Joining us now to discuss, Wamsi Mohan, Bank of America senior IT analyst. Wamsi, great to catch up with you. I mean, Apple has kind of retained a lot of the outperformance that it built up through last year, I'd say. It's still slightly ahead of the S&P 500. Is that just essentially a quality and safety benefit of, the great balance sheet and the predictability, or are things going on within Apple that also are driving that?
Yeah, thanks for having me. I think it's really both of those elements, right? I think when you look at some of the stocks in our coverage universe, IBM, for instance, has materially outperformed, and I think that's being treated more as a safe haven stock. In Apple's case, people are recognizing that there are a lot of headwinds associated with what's happening in China in terms of the shutdown, potentially, another round of that coming. The supply chain issues that Apple alluded to, $4 to $8 billion, right? So the people have been tuned in to all those issues and sort of discounting some of that. Now, at the same time, we are getting a lot of data points that are supporting a pretty decent quarter here for Apple, given that supply availability has been very, very good. For Apple, all the products are currently pretty much available to buy. On the other hand, there is a case here to be made that China might reopen much more strongly. It looks like the iPhone 14 is pretty much on time, which is net positive as you look into the September and December quarters. And I would say that positioning is actually fairly negative in a sense that on the margin, people are concerned that there would be a round of estimate cuts like you've seen across a lot of the hardware space and semi-space, and that is yet to come. So on balance, I would say that it's not so much of a safe haven trade. I think there's a lot of Apple-specific things that are going on that are insulating it. The earnings power is not going to deteriorate as much as people are worried about.
Right, I was going to say, so you don't expect there to be one of these rounds of estimate cuts, presumably. And what about the App Store income stream, perceived vulnerability? At least at times, people were wondering about whether, they kind of over-earn from App Store in services. Is that something that people are going to have to lower their expectations for over the long term?
Look, I think that on the services side, right, I mean, it's a very complicated basket of a lot of things. And if you look at the App Store, yes, the headline numbers are decelerating. But if you look on a quarter-to-quarter basis, right, the App Store, according to third-party data sources, grew about roughly 5% in the second calendar quarter. If you look at the first calendar quarter, that was 6%. So the materiality of the deceleration is only a point as it attributes to the App Store. But when you look at the broader picture, the bigger deceleration and the tougher comps that they're facing really comes from their Google licensing revenue. And that licensing revenue is what is causing a material deceleration here in the June quarter. So when you think about the 17% they reported last quarter versus, we're modeling 12% for this quarter, that's largely coming from the much tougher Google comps, which then start to get easier. Also in the App Store start to get easier as you go to the back half of the year. So we think there's going to be a material reacceleration. And this deceleration here in services is sort of transitory and temporary here in the June quarter, which we think will be a bottom in terms of services growth rate over the next several quarters.